Now, what always happens after a breakout? There's always going to be a pullback. There's always going to be some type of opposite direction that the price wants to head for a little bit. That could be a sustained pullback or just a one candle pullback. Like it's up in the air. It's dependent on the situation. But pullbacks are bound to happen. Like, they're inevitable. Pullbacks happen all the time. They are literally bound to happen at some point in time. So you just got to understand what pullbacks are. And hopefully I'll be able to teach you how to trade the pullbacks after this video. So pullbacks. It's the second phase of the market cycle. This occurs when price action heads in the opposite direction of the trend that the chart is currently in. There are going to be examples of this after this slide, so don't worry, we're going to go into this when we get to the examples. These can be quick or sustained for a long period of time. Like I was saying, they could be one candle pullbacks, or they can be, you know, a whole day of a pullback. You know, it just all depends on the type of pullback. If a pullback is occurring after a breakout/breakdown point, the area where the breakout/breakdown point occurred has a great chance of acting as a sort of support or resistance. And I showed you this on the past video of the breakout and breakdown video. You can see how a lot of the times price would like get to that point of the breakout area and it would just kind of stall out, and then like trend would continue. So yeah, that breakout/breakdown point, that is a key area to like pay attention to, like what's happening with the price action. Always pay attention to 50% retracement points from any high/low as an area where price may stall and or bounce to continue with the trend. So the important part with this is, especially with pullbacks, the 50% retracement point, which is a 50% pullback from a high, right? And like I said, I'm going to go over this in the examples so you'll see, but 50% retracement points, they're not always exactly right, but a lot of the times price bounces off that area, right? So let's just get into these slides. Let's get into what I'm talking about. So here's our first chart. This up here, this 43,223 is the high of this specific chart. And this right here is the low that I'm going to be playing off of, or I'm going to be paying attention to for this specific chart. Not these ones down here, because you don't know what the hell happened over here. You can only, you know, we're just going to go off of this. So, and that point was 42,798. So we're just going to say 42,800. So there are multiple breakout points and pullback points on this chart, but there's one specific area that I want to pay attention to, and it's this. So we're going to go off of this right here, this low, like these, you know, this double bottom right here being broken. That was the breakout point, right? This is the breakout point right here. So we have a gap candle, huge bear candle down, boom. And yes, you can say this is a pullback, right? You can say from this low to that high, that is a pullback. Don't get me wrong. I'm not saying it's not. That's not the one I want to focus on in this chart though, because you see how we just continued. This was a market open candle. You see how at market open, we did end up pushing up here, but ultimately ended up closing down here. Super bearish candle, super bearish. And because of that reason, price continued to push down lower. Even this was a little pullback. This was a one candle pullback, but that's not the one I want to pay attention to. But this is kind of the beginning of the pullback phase of the chart. So you get that pullback, which is a break above this previous bear candle, break above that high, and it closed above it. You know, that's indicating price could potentially go in the opposite direction. It continued for a couple more candles, a couple more bearish candles, but you can see how it stalled out relatively around the same area. Like this is what, around, we'll say 25, 30 points, right? Difference. So it broke the low by about 25 or 30 points. But after that, we get more bullish candles, more bullish momentum, and the pullback phase of the market cycle begins to happen, right? So once again, this right here, this was the breakout underneath this low right here. We go down, and then that's the first phase, breakout/breakdown. The second phase, pullback. This is the pullback right here. And you see how this was a sustained pullback for like 3.5 hours. So this was a significant pullback, like time-wise, and even like points-wise, because right here, we're going to say once again that it's 42,800. To this top right here was around 43,050. So that's about a 250-point move that occurred over like I said, 3-hour period. Remember what I said about 50% points. This line, this blue line right here, indicates the 50% point in between this high up here and this low right here. So this would be the 50% retracement point, 50% pullback point from that point up there, right? Or from this like range, in this range, from that high to that low. So you see how price is pushing up, pushing up, pushing up. And even though there were a couple of bearish candles in this like trend, this little bull trend, it was mostly just bullish momentum, just going higher and higher. And there's multiple ways that you can trade a pullback. The first way is acting as a counter trend trade. So a counter trend trade would be trading in the opposite direction of the current trend. On this chart, the current trend is a downtrend. You can see how price is just going down, right? At this point, let's just say it right here, right? Let's say this candle right here. At this point, or we'll say this inside candle right here. At this point, because all this hadn't happened yet, you're just seeing this. You're just seeing all of this price action. This is all bearish price action. Hella bearish price action. You can see that at this point, because there is an inside candle and it's around 7 o'clock in the morning, and because we've already made such a big move down, there's a potential that price could reverse, right? I find that the normal daily range, or the average daily range of the Dow at least, is around 400 points. You can see how from this high, which is around 43,223, down to this low, which is, like I said, we're going to round up to 42,800. That is a 423 point move, right? So, based on averages, the market should go in the opposite direction for a little bit. Based on averages, not 100%, it's not 100% accurate, but based on averages, should go in the opposite direction. And in this case, it did start to go in the opposite direction. So if you wanted to counter trend trade on a pullback, on a potential pullback, and because this was a double bottom, because that was the first bottom, this is the second bottom, you buy above a bull bar, you try to take this to at least around the 50% mark, to maybe even a little bit below, just to be safe, just to have it be a little bit conservative. But if you're trying to counter trend this to at least this area, then you have a good chance of it hitting. If I'm being honest, you have a solid chance of it hitting. If it's a sustained pullback, you have a solid chance of it hitting that 50% pullback area. And in this case, it did. It took about, hour and a half to hit that area. But we're going to say this would have been the first good entry to take, even though it's not necessarily a good entry. It's just if you wanted to do it as a counter trend trade, this would have been the first valid counter trend trade to take. Because yes, you could have taken it here, bought above this bull bar, but had you done that, you would have been stopped out, right? And this is just the first pullback. This wasn't the second pullback. And there's no, this isn't a double bottom, right? So that's why this area was a better area to be risking off of as a counter trend trade. So you buy above this bull bar, which would be right here. You get filled right here. Your risking is down here. Your risk is down there. So how big is this? From here to here. That's about, we'll say 60 points that you're risking, right? 60 points. So if you want to do a 1-to-1 risk reward ratio, then you're risking 60 points to make 60 points. If you want to do a 1-to-2 risk reward ratio, you're risking 60 points to make 120 points. So let's try that, because in this case the chart did actually go a 1-to-2 risk reward ratio. Let's do 120 points from this area right here. So if we're going 120 points from this area right here, because that's where the entry is, from 42,850, that would be 120 points. That's 42,970. So that would be right in this area right here. Right? So it would have taken you approximately 20 minutes. 20 minutes and you would have been executed. Boom. And with these counter trend trades like that, especially after a big move down like this, you don't want to risk it all. You don't want to hold or try to hold for up here. At least not right in the beginning, because this could just be a quick retracement up, a quick pullback, and then the trend continues, because once again, we are in a downtrend. Previous to this point, even though this did happen, there's so much more bearish momentum, bearish price action that has occurred throughout the day. So probably going to continue to go down lower, especially once we stalled out at the 50% point. Once again, what is the best area to enter as far as entry point for a counter trend trade, trading a pullback. Also could have done it after this bull bar right here, because this was an inside candle from this candle, right? And this was a bull bar. So you could have bought above here, but if you are buying above there, you have to risk it down here. Do not risk off of this or whatever the case may be. Your ultimate risk has to be down here. With that being said, that is what? Let's say that's around 42,950. So that's a 150 point risk that you would have been risking. You wouldn't have made 150 points because this high was only 100 points from there, right? So you would have had to do a little wonky of a risk reward ratio, but you still could have profited on it. You still could have made money. But that's not the optimum entry area. This was an optimum entry area, and you could say that this would have been an optimum entry area because price tried to break lower and it didn't. But this is a bear bar, so not necessarily a good one. But this right here, this is a awesome entry area, because you see how price is pulling back. It's still in a pullback. It hasn't broken underneath any of the lows that has occurred during the pullback. And yes, we get this continuation, but this didn't break. This low didn't break. So the pullback is still intact. We got an inside candle right here from this candle. Yes, this is slightly lower than this, but it pretty much constitutes an inside candle. So you get an inside bullish candle. What do you do on inside candles? You react to them. Where do you react? You buy above a bull bar if it's a bull bar. So you buy here, your risk is either down here, down here, down here. You choose. But ultimately, regardless of whichever stop loss you chose, whether it was here, whether it was here, whether it was here, you could have taken this entry up to here, which would have been around a what? We'll say close to around a 100-point move, right? And it stalled out at this double top right here, meaning price does not want to go higher than this. So you could have bought right here and got out right here in this area, and boom, there you go. There's your counter trend trade for the day. And then you can continue to try, but like I said, bro, after this, you got a double top right here, double top. You can even call this a triple top because that was a high right there. At a 50% area from like this zone, from this high right here, right, and this low right here, it's in the 50% retracement area. The odds are not in your favor to go higher if we're getting a pullback from that area. The odds are not in your favor. More likely we're going to go lower, and the price is going to continue to follow the trend. If you wanted to trade with the trend during a pullback, then what you do is, in this case, once again, we were in a downtrend. So this is the pullback. Boom. You wait for a bearish bar. This is a bearish bar. And you wait to enter underneath the bearish bar. Could you have entered under this? No, because the price didn't break beneath this after the next candle. So you would have had to at least enter under here or under here. And had you done that, yes, you would have been stopped out, because your ultimate risk is going to be up here. If you're shorting underneath here, your ultimate risk is going to be up here. That's a huge risk. That's a huge stop loss. You can't be risking that much. You could have tried to risk off of this because this was the high from the morning. Or you can say, you know, this was the low, this is the high, this is the range that it's trading in. I'm going to wait for the 50% pullback area to be hit, or 50% retracement area to be hit. Once that area gets hit, then I'll decide whether I'm going to try to short and go with the trend, or try to buy and take this as a counter trend trade, as a continuation of a counter trend trade. And in this case, had you done that, had you had to buy, so I'm just going to short underneath the bear bar around the 50% area, then you would have shorted underneath this bear bar right here, because that's the only time you would have been filled, right? If you had a stop order, you want to short it underneath this, risking off of at least this area right here, right? Because that is the market open high. So you would have been risking, it's pretty much the same with that, equal with that. So you would have been risking around, if this is 43,000, you would have been risking around 65, 75, right? So I'm just going to round it up to 75. If you're risking 75, if you want to make a 1 to 2 risk reward ratio, then you got to make 150. 150 from this point would be what? 42,850. Boom, right here. Would have won, right? You just wait for the 50% point to be hit, wait for it price to stall out or show that it's stalling out in that area of the 50% retracement area, and then you execute, you enter, right? Especially after a double top, because this high right here, one high right here, another high right here, two, and this high was a lower high than this high. This high was a lower high than this high. This high was a lower high than this high, right? So price is just showing you like, bro, I want to go lower. I don't want to go higher because I'm not making any highs. Like, I'm not making higher highs. I'm making lower highs. Meaning I don't want to go higher. I want to keep going lower. We already accounted for this position right here. After this area right here, after this price stalls out in this area, creates this high, and then forms this bearish candle, you short underneath this bearish candle, meaning you're entering right here, which is exactly at the 50% retracement point. Exactly at that point. And you either take it to the low or you take it however many points you want. It's up to you. But that would have been a very valid entry. And in this case, had you taken it to that low, you would have won. You know what I mean? You would have won that trade. It would have been a solid 200-point gain and potentially more if you would have held. And yeah, this would have been a great trade. So to recap this, if you want to trade on the counter trend for pullbacks, this would have been the best entry point for that counter trend trade. You could have added another solid entry point right here. But just remember, when you're counter trend trading, you can't expect price to blast up in this area because price is not ultimately trading with the trend. It's just having a little pullback. It's in a pullback phase. You can use the pullback phase to find your entry for the trend. Entry with the trend, I should say. And this was that entry with the trend that I'm talking about. You can take it right here. You can also take it right here because there's a double top. Yeah, so there's multiple ways that you can trade pullbacks. Multiple ways. Let's go to another example. I got two things to mention real quick. Number one, I am releasing the full course that this video is a part of. The full candlestick price action trading course is on YouTube right now. It's over 18 hours of free trading game. There are so many golden nuggets in this course, you're not even going to believe that it's free. But I believe this information is so valuable and so helpful for everybody. I just want it out there, honestly. I truly feel like everybody has the potential to benefit off this information because if you can read a chart, then you can profit off of it if you know how to read it with the candlesticks. And this information that I'm giving you guys, it can be used to trade on any sort of candlestick chart, right? Whether it's Apple's candlestick chart or Tesla's or gold's candlestick chart or Bitcoins or XRPs or euro versus the dollar or British pound versus the dollar, other stock markets around the world. It doesn't matter. If there's a candlestick chart, you will have a severe edge in reading it. I truly believe that with dedicated time and practice, anybody can become successful in trading. Anybody, like a grandma can literally do it. It just takes a lot of time and effort to learn how to do it. But understanding candlestick price action will severely help your trading journey. It severely helped my trading journey. I literally learned it, and a month after I learned candlestick trading, I became profitable. I passed my first prop firm account. So that is how impactful this information is. And I'm giving it to you for free. A lot of it. The second thing I want to mention is I am releasing amazing workout programs. As I've told you guys before, I am a certified personal trainer and a certified nutrition coach, but I've also been going to school for personal training. And shout out to my instructor, Paul, because he's given me hella golden nuggets throughout my whole journey in school. Because of that journey, I now have workout programs that can positively benefit everybody. And I mean it, like, let me explain. I have a full body muscle building program, aka a hypertrophy program. I have a fat loss program, so if you want to lose 20 pounds, you get on that program. I've got a core program that'll help you develop a six-pack like this. And I got a booty building program if you're trying to get your Kim K on. And they all incorporate a little bit of cardio because that's also very much needed in everybody's life as well. I'm also providing nutrition guides. I'm also providing recovery guides. And this is just the beginning. It's only going to grow from here. I already know how impactful it's going to be for other people because of how impactful it was for me. Because look at this picture of me from last summer and look at this picture of me from now. This progress was specifically from my muscle building and full body workout program. One of the beauties about working out and being active is it does not matter what age you are. You honestly have to do it. You need to be active. So anybody can work out with these programs. As long as you are medically cleared to work out, these programs have the tremendous potential to positively impact your life. And I'm so serious when I say this. The number one thing that you must always remember throughout both programs, whether it's the trading program or whether it's the workout programs, you must always believe in yourself and your abilities and your ability to achieve any outcome that you want, okay? Because you absolutely can, but it's going to take time, and you need to understand that it's going to take time. But if you dedicate the time, the effort, and the dedication to doing it, eventually it's going to happen. So don't stop. Do not give up on yourself. I believe in you. You got to believe in you too, okay? And you do it with this, and you do it with this. I believe. I want to end this video by letting you know that you are worth it. You are beautiful. You are absolutely everything that you want and need to be. It's already there. You already have it. You just have to realize it. That's really all it is. And always remember, regardless of what you look like, you are beautiful and you are created in God's image. And God is perfect. He doesn't do no wrong. So you are perfect. You just have to realize that perfectness within you. Or another way to say it is you have to understand the confidence and the power that you have within you. My goal is to awaken that confidence and that power within you, because you truly have the power of the universe within you. You have the power of God within you. You got to understand it, man. You are one with the creator. You are a creator. So let me help you create the life that you want to create. Let's do it together. So go check out infinityian.com. Everything that you need is going to be there. And I hope to see you there. I love you guys. God bless you. And I'll see you guys in the next video. Whoosh.